can be easy to think, oh, well, I'm making money. I'm a good trader. And then, if you pull it back and look at the larger picture, then you're actually losing money. So I think it's very important that you take the extra time to really download your transactions and follow them in one centralized place, just to make sure that you're actually doing as well as you thought you were.
This is the Dough Roller Money Podcast. I'm your host, Rob Berger. In today's show, we've got a good friend of mine, Joseph Hogue. He is the founder of Let's Talk Money, a wildly popular YouTube channel. We're talking over 500,000 subscribers, at least the last time I checked. I don't know, maybe there's 1 billion subscribers now. And something I need to ask him about, he is purportedly the author of 11 books, and I kind of need to figure out how he managed to do that. Some titles include Step-by-Step Dividend Investing and Make Money Blogging. So yeah, in all, he's published, and I should say self-published, 11 books. Joseph, welcome to the show.
Hey, Rob, thanks for having me. Good.
So do I have the number right, or was that a misprint?
Actually, I think it's like 12 now. It's hard to keep up with sometimes, but it's actually fairly easy when you're in this industry where you're creating that content regularly. And it's one thing that's really changed my life. Really helped me start this online business, this idea, because it was much faster to cash flow, to monetize those books, rather than building up some of the other online assets. So yeah, love to talk about self-publishing and how people can use that along with some of these other business ideas.
Well, why don't we jump in? Why don't we start there? I mean, we're certainly going to talk a lot about your YouTube channel, but let's start with the book. So, kind of as much or as little detail as you want, how you go about, and I've self-published one book, but how you've gone about self-publishing books, and how do you measure success, and have they been well received, and how do you market them?
Sure. Well, it's like I said, I think it's a great part of your online business plan, really. Like I said, so I started blogging in 2013, started my YouTube channel a little late in 2017, and went into, I come from an equity analyst background, and went into that online business idea knowing that you don't make money very fast. A lot of these assets, these blogs and podcasts and other things, they take a long time to really start making money. So looking for things that would cash flow faster, things that would enable me to pay the bills while I grew these other online assets. And I came across self-publishing. And it's really a natural fit for bloggers, YouTubers, podcasts, anyone creating that kind of information stream, that content. Because you are creating that content regularly. If you're doing 2 or 3 blog posts a week, you're within 2 months, you've created a book, basically, as far as length and content. So it's really a matter of just integrating that idea of self-publishing into your other content, or into your content strategy, into your plans, right? So what I would usually do is every 3 months, every 4 months, is figure out, okay, what's the next book I want to write? What's the next topic I want to write about? For books, you start at the end. You start with what you want people to be able to do at the end of the book, and then you work backwards from there. And you do not need to be the expert. One of the biggest hurdles I think a lot of people have to get over is you don't have to be the expert in the world, right? You don't have to be a master in the topic, because a lot of times it's that personal journey and that experience that you can share with people that really motivates them and inspires them to actually do something with that information, right? How many books have you read that were really good books, really, really well written from, a master in the topic or an expert, but you never really did anything with it because you weren't motivated or inspired to do it. So yeah, find a topic that you can share your own personal journey and your experience in, working backwards from what you want people to be able to do each chapter. And basically each chapter becomes a blog post or a video or a podcast, right? And so that's going to enable you to keep that content schedule going, right? Feed the Google gods and the YouTube algorithm by pushing out that content regularly, maybe every week or so. But it's also creating that book as you go. So at the end of, a month or 2 months, then you've got the content there. You reformat it, revise it a little bit, maybe add a little bit extra, so people are getting more than what they would have gotten if they just watched the videos or read the blog posts, and you're basically ready to go. And the beauty of this is that you are, even for a small blog just starting out with absolutely no traffic, by self-publishing that on Amazon, you are on, the largest e-commerce site in the world. You've got billions of people visiting that site. So you've got that distribution for your product, for your book. And it's an instant income stream while you're building up some of these other assets.
Do you hire people to help you with the actual formatting of the book, doing a cover, getting it up on KDP, Amazon's platform, or do you do it all yourself?
Well, I started off doing it myself just because that's how you're supposed to do it, right? You're supposed to bootstrap all these things, and it helps to find out really what you want, what you need. But I think you quickly move on to outsourcing and getting some of those technical aspects done for you and freelanced, because there's no reason why I need to be a graphic designer, right, to do covers and things like that. So
do you just hire individually
the formatting
the people you need to help you?
easy.
Yeah.
I do. I'll go to Fiverr for some stuff. I'll go to Upwork for a little bit longer term work, that kind of thing. But yeah, you can easily outsource the cover design. Formatting is very quick and easy, but it only costs about $20 to get somebody to format it for you. So, besides the content, which is your real value added part of the game, then you can outsource a lot of this other stuff and free your time up to do what you do best, is creating
If
that
folks
content.
are interested in checking your books out, I mean, obviously they can go to Amazon. Should they go to one of your websites first, or where should they go to find all your books?
Really, Amazon is really the best. Searching for my name. They can go to any of the websites, and I've got links to the blog, links to the books, links to Amazon for the books there as well. But yeah, it's really an amazing income stream, especially for people just starting out. You can make I average at different points in the books. I'll average usually $100 to $200 a month per book. Sometimes it falls down a little bit to maybe $50, $60 a book per month. But if you're doing this every 3 months, every 6 months even, you can quickly build up a library of 4, 5, 6 books even, and it's a steady income stream.
So it occurred to me, and that I sort of jumped right into this interview without actually letting you give a chance to talk about who you are, and just to sort of, I know you were a Marine back in the day, right? I guess once you're a Marine, you're really always a Marine. You never stop being a Marine.
You're always it's always there somewhere. It's always there somewhere.
That's what my son told me. He goes, you never stop being a Marine, and Dad, I'm not a soldier. I'm a Marine. There's apparently a difference. Anyway, you're a chartered financial analyst. You were an equity analyst. I think. Tell us about it. You were an equity. Tell us what you did as an equity analyst, if I've got that right. Mm-hmm. And then how in the world did you go from that to a YouTuber/blogger?
It was a weird path, a weird journey, I guess. I started out in commercial real estate in college as an analyst there, while managed my own real estate assets, and quickly fell in love with the analyst role in investments. Shifted pretty quickly to equity analyst and economics, economic analysis. And a lot of that was I set up a sell side research division for a private, for a private wealth firm there in Canada, venture capital. So I worked that for a while. I've worked as a freelance analyst, so creating equity analyst reports and investment research for a little over 10 years now. I really stopped doing that largely when I started really taking off on YouTube. When it became, that YouTube career was so much larger. And like I said, it has been a weird path, because you wouldn't typically think of somebody going from, that kind of technical background, equity analysis, to a YouTuber or a blogger. But I think it's just a great opportunity for any role, for anybody out there, to turn what they have, what their formal education or experience into some kind of an online business that they control, right? That was really the big motivation for starting the blogs, for starting the YouTube channel, is something I could control, something where, the amount of work, the amount of time I put in directly related to how much money I made and how successful I was. So it really, and it really went into being able to reach people on a more personal level as well, right? Working private wealth management and as an equity analyst, you never really see a lot of the people that you're helping, and a lot of times it's restricted to only the most wealthy. Whereas blogging and YouTube helps me kind of reach out to those Main Street investors and the rest of the rest of the 99%, I guess.
When did you go full time as a blogger, YouTuber, author?
Sure. Well, that was in
Oh, okay.
2013. We moved to Colombia. So I had worked as an equity analyst and in economics and real estate before that. But I knew I wanted to start those online assets. I had worked in Colombia as a free trade consultant for about a year and a half. Loved the city. Loved Medellin. It's super low cost of living.
Is
So
this
of course
Colombia,
that helps.
Missouri? Is this the country of Colombia? Is
No.
this
Yep. Think way south. Colombia, the
okay?
country.
Is that where you are
Uh,
now?
so
I
yes.
did not
Yep.
realize that.
Actually,
Okay.
moved down here in 2013. Ahead of setting up those online businesses, and really, a couple of different ways, reasons to why I did that. One is the lower cost of living, right? If you can, work U.S. and live, somewhere else where it's a lower cost of living, then obviously it gives you the opportunity to start something small, to start something that might not pay the bills quite just yet, but you can grow. So that was part of it. Also, a big part of it was finding those income streams like self-publishing that could cash flow immediately while I built other parts of the business. So yeah, been living here since 2013 with my family. Actually, plans on moving back up to the States as soon as possible, but still down here
Okay,
south.
good. Well, let's transition over to your YouTube channel. And I've watched, over the years, a lot of your videos. One thing I noticed is that you do a lot of videos, basically, I guess, consistent with your background as an analyst, evaluating stocks. Here are seven,
Sure.
or here are a select number of good stocks for a certain exposure to whatever. It could be, I don't know, cannabis stocks or internet or whatever. I'm curious if you could like walk us through how you go about finding those, analyzing them. I don't know, what
Sure.
tools do you use to analyze stocks? And you know, do you do is it fundamental analysis where you're looking at, what you think the intrinsic, Warren Buffett, right? An intrinsic value and comparing it to its current price? Are you doing technical analysis? What's the magic behind the curtain, at least
Mhm.
to the extent you can
Sure.
share that with us?
Sure. Well, absolutely. I'm an open book, so to speak. But I'm a big top-down investor. So especially from my days as an economic analyst, so I always like to look at the larger trends, right? The demographic trends, the economic trends, things like that, starting at that higher picture, and then drilling down into what are the sectors, what are the industries, and what are the stocks that are going to benefit from that. And by doing that, I think it just makes investing so much easier, and maybe easier is a loaded word, but I think it does make it easier. It makes it less stressful to really invest, because you're finding those larger trends, like maybe, let's say, for example, demographics, the aging population, right? Which are the sectors of the economy that are going to benefit from that theme or from that trend over the next 10 years. Uh, and so then you find those sectors that are benefiting, drill down even into the industries within that sector, if you like, or just going from the sector level down to the stocks. And what that enables you to do really is you're picking stocks now from a much smaller universe, right? Instead of trying to pick from the 5,000 stocks, traded on the exchange, on the U.S. exchanges, you're only trying to pick maybe out of the couple of hundred stocks, or less than 1,000 stocks within a specific sector. Okay, so it narrows your field down. You can then go through and look at things like competitive advantages, things like some of those other fundamental factors. But what it does is that, because you're investing in this larger, broader theme, this trend, then you don't necessarily have to pick the best of the best stocks, right? Of course, you want to, but if you're off a little bit, if you maybe only pick the fifth best stock, over the next 10 years, the stock that has the fifth best returns in that sector, you're still doing pretty well because those broader overall general themes are still driving all the stocks in that sector. So not only does it make your job easier picking stocks because you're in a much smaller universe within that sector or that industry, but it also gives you that tailwind of these larger, broader trends and themes in the market. So that's really where I like to start. So I'll follow a theme, whether it's from a demographic theme or an economic theme, or maybe a some kind of a theme. A trend like we're seeing, whether it's electric vehicles or metaverse, things like that. Any kind of a broad, decades long trend that is going to push stocks in that group. And then, of course, you just go into the fundamentals, right? The Warren Buffett investing, that kind of thing. So I'll look at valuations. Obviously, I like price to sales a little bit better than price to earnings, which is obviously more popular, just because that price to earnings, is very much manipulated, right, by the shenanigans that management likes to play with earnings. So I'll do with price to sales. The operating margin is one of my favorite tools because it really shows you that core profitability that the company is able to drive. And a lot of times kind of a competitive advantage. One thing I've been looking at more lately, just in light of the trend in inflation, is the gross margin, right? So you've got your total revenue and then your cost of goods sold and then the gross profits and the gross margin under that. Well, I think that's a great indicator of companies that are able to pass on those rising costs that we're seeing right now. So I think over the next year, over the next 2 years, it's going to be an extremely important measure to be able to find those stocks able to withstand these kind of inflationary pressures. Right. So just that kind of fundamental analysis. I like to look at the balance sheet to see, how much cash and how much debt is held there, and a lot of things like that.
The tough thing for me, like you mentioned electric vehicles. I don't think it would. The prevailing view, one that I agree with, is that electric vehicles are the future, right? The hard part is the valuation side of it, right? Because most of the electric car companies have no profit, many of them have no revenue at all. They're losing money. Tesla makes a profit, but
don't say anything bad about Tesla. There you will get flamed. But I agree. I agree totally.
Tesla, the company, I've got no criticism with Tesla, the company, but clearly its valuation is, by any historic measure, quite high. And so, like, if someone asked me what are the best electric company car stocks to invest in now, my answer would be none of them. Well, I mean, that doesn't make for a very good YouTube video. So
it doesn't. And I think a lot of these you have to kind of, with a lot of those trends, especially the hotter trends, the growth stocks, things like that, you have to step back from the focus of the investor focus of the day, right? Obviously, the electric vehicle stocks are very much overbid. But if you go further into that trend and into that theme, then you start looking at, okay, what other sectors, what other industries are going to be driven by this? And of course, a lot of those are also, bid quite high as well. But you can find a little bit better value in things like, I know the charging station stocks have come down a little bit since the beginning of the year. So I'm starting to look at some of those, and obviously those are very much going to be driven by the infrastructure bill that is, targeting 500,000 stations over the next, I think it's 10 years, something like that. So I think within those, you're going to start seeing those companies, even though they still don't have much revenue or zero earnings yet to produce or to report, you're going to start hearing them talking about how much money they're getting from this infrastructure bill. But also, things like the miners. Copper is actually 3 times more copper used in electric vehicles compared to your traditional combustion engine car. So they're actually, I've actually seen estimates of a copper supply deficit within the next 2 to 3 years, just on growth in production of electric vehicles. So you've got copper, you've got the battery minerals, right? Metals, lithium, and so forth. And so, yeah, you look further into the trends, and I think you can find a little bit better valuations just because, maybe the rest of the market hasn't caught
Yeah.
up or went quite so far into those.
Yeah, it the sort of the picks and shovels, the ancillary industries that
Yeah.
have to support, in this case, electric vehicles. I don't know if you noticed, Kathy Wood of ARC just said that she thinks a lot of these technology companies are in deep value. I thought that was interesting. And of course, she's a big,
Well,
yeah,
yeah.
she's a big Tesla.
Of course, she's going to promote her, her
Yeah.
strategy and her themes. I mean, she's also saying that she believes her fund can produce a 40% annualized return over the next 5 years, which, I will give her. She's got a great research team there. So I love some of the reports she's put out, and she was right in her $1,000 Tesla call. But if you, and I'm actually getting ready to produce a video on this, kind of how do you validate some of those things that fund managers say, and that one is in particular. And just looking at the sales, if you take the price sales, because she says that in over the next 5 years or so, with that 40% annualized return, her funds, the price to earnings or the price to sales, the price multiples basically should look a lot like the FANG multiples, right? So what do those companies need, her companies in that ARK-K, for example, what kind of sales growth do they need to be able to justify that price to sales comparable with, Meta, I guess now Facebook, Apple, Netflix, Google, that kind of thing, and to produce that 40% growth. And it's, some of the stocks, it's a little hard to believe that they will be able to decrease their valuation multiple, right, down from valuation multiples of price to sales of 20 and 30 times in some cases,
Yeah.
down to 10 times, and still be able to produce that 40% annualized
Well, the tough
return.
thing there too is I like the price to sales metric as well, among others. But a lot of these companies might increase their sales and still not make a profit. And so, in my mind,
Yeah.
comparing them to even a FANG stock where, yeah, their multiples are high, but they're actually making truckloads of money. They don't even, there's so much cash, they don't even know what to do with it. But yeah, I guess time will tell. One thing that I thought kind of funny was she goes, we're not going to be held hostage by the benchmarks. And I thought, well, it's interesting that you would invoke sort of a warlike term, but maybe she meant we're not going to be held accountable to the benchmarks, because it's really saying the same thing.
I think, yeah.
Just not in maybe the way she hoped. But who knows? I mean,
Yeah. Well, I think, she's in crisis
Yeah.
mode after, 32% slide in that, in their
Well,
flagship fund
you know,
this year. They're protecting
yeah, but in
that
all
market
seriousness
cap.
about this, and this is one of the reasons I'm not a fan of ARC, and this is another way, by the way, to get flamed on social. Um,
Yeah.
I would have much more confidence in what they're doing if she took the Warren Buffett approach and came out and said, you know what, we've had a really crappy year. I've not done my job as a manager. Although I do think long term we'll do well, and here's why. But yeah, this year's been really, really awful. I would respect that. That's exactly what Warren Buffett does when he makes an investment, and he's done this from time to time, that turned out to be a bad one. He goes, yeah, I blew it. Anyway, that's my own personal preference.
Yeah.
But it does underscore sort of the personality behind these individuals and how they think about things. Because you mentioned her call on Tesla, and I think I see that and I think, wow, that's amazing. She also said oil was going to be worth $12. Oops. So
Did she?
you've
Okay.
got to.
Yeah. Well, and she said Bitcoin was going to be worth
Yeah.
500,000. So definitely some reaching some stretch
Yeah,
goals
well,
there, I guess I would say.
Yeah, I guess it comes with the territory of trying to predict prices. You just can't do it. I don't think anyone can. But that being said,
No.
you've done some videos on crypto. So what's your take on crypto today? And do you own any? What do you own to the extent you're willing to share?
Sure. Sure.
What's your sort of approach
Actually,
to
yeah,
crypto?
I do, and I've come full circle, really, or well, I guess I would say 180 on cryptocurrency. I have been a skeptic in the past. Over the past couple of years, I've traded in and out of Bitcoin off and on, just to take advantage of some of those price swings. Before this year, before 2020 or 2021, actually, I guess. But this year, this 2021, I have actually become more of a long-term investor and more of a believer in the longer-term value proposition of these. I do actually have about $500,000. Actually, I just checked it earlier. It's about 507,000 in cryptocurrency in Bitcoin. Ethereum is my largest holding, but Bitcoin, Ethereum, Matic, so the Polygon Matic, Aave, AAVE, and then the Cardano, the ADA token. And really, the idea behind the Ethereum and the other altcoins is different from the Bitcoin thesis, right? The Bitcoin thesis is not so much a utility coin, right, but just an investment, right? And people say it doesn't have any value, but then again, it's really any kind of currency is the value we place on it, right? So I don't know that I buy the argument that there is no value to Bitcoin because if you look at a lot of other things that we say have value, whether it's artwork, whether it's fine wine, or even in some respects gold and some fiat currencies, they have value because we can use them in exchange for something, which you can do with Bitcoin now, and because investors say they have value, right? So my thesis behind Bitcoin is just, the increasing adoption as an investment vehicle for that. Now, the other ones, like I said, Ethereum is my largest holding, and the altcoins I have quite a bit in those because it is a very much a utility, utility theme in the blockchain. And with the rise of this blockchain technology in pretty much every sector, it's gonna revolutionize. It's already doing it with finance. It's gonna revolutionize healthcare as far as records management and that kind of thing. But the idea is that as this blockchain technology is used more, then you do need these currencies. You need the currencies to validate the changes in that ledger, right? In that digital ledger, which is the blockchain. So they do have value, which is something I think a lot of people don't really understand well when they say that these tokens, these cryptocurrencies, don't have any fundamental value, because they do. Now, of course, right now, a lot of the value or a lot of the price of these cryptocurrencies is investment value. It is people buying more in it, but that fundamental value does exist because you do need these tokens to verify, to validate the changes in that blockchain.
Yeah. So I don't own any Bitcoin. I own an extremely small amount of Ethereum and Solana and Cardano, all smart contract coins. Having said that, I'm not at all convinced that smart contracts are the future. I know that that's a theme behind those technologies. And I know there's some, well, you've sort of laid it out, and it really, I think, in a helpful way. I know Gary Vee is a huge, he said, I saw the other day, he said every contract will exist on the blockchain. And I personally just don't see that happening. And I'm not even convinced, having spent some time looking at it, that smart contracts are the future, or that we will have things like our health records on the blockchain. But my question, I guess, would be, and you may not recall this off the top of your head, but like, have you read anything, any books or articles that really you found that really helped you sort of understand the smart contract and its possible future? And again, I'm kind of putting you on the spot. If you ask me that, I'm not sure I'd remember any, but
Yeah, I mean, none in particular. I haven't really done a lot of research into smart contracts
okay.
specifically, just the
Yeah.
blockchain itself, and how that technology is enabling things like the smart contracts, the NFTs, things like that. And you're right. Any one of these, particular uses of the blockchain may not be around in the next 3 to 5 years. But I think the overarching in technology of the blockchain is enabling these, and what we're seeing in decentralized finance, what we're seeing in just the kind of the sharing nature, the sharing
Yeah.
economy nature of the blockchain. And as we move further into the metaverse, if that's going to be a thing, then I think you're going to see a wider adoption and more uses, beyond smart contracts and beyond NFTs. I have no doubt. Well, I mean, I will agree wholeheartedly that NFTs are probably in a bubble. That I still have not come around to the real value of those. But broader than that, I think, is what the blockchain is enabling, companies and the economy
Yeah.
to do. And I think that's something that is durable and is going
Yeah.
to last.
I always think the real test to all of this will be, what do the valuations do when interest rates and money supply are normal, or at least
That
revert
is the
somewhat to
big
the mean?
question, right?
Um,
That's the big question, right? The Fed has increased its balance sheet to $9 trillion, and 4 or 5 trillion of that is just over the last 10 years, right? What happens when if it brings
Crazy.
that down to even
Yeah.
6 trillion? That's $3 trillion of liquidity, and really liquidity has been driving this market over the last 2 years. So yeah, what happens when that comes out? And it is the one thing that kind of scares me about the market, about
Yeah.
cryptocurrencies, about a lot of these ideas. But one thing I can say about cryptocurrencies, apart from maybe some of these other investments that have benefited, that have sharply risen because of that liquidity, any of the growth stocks, the ARKK, those kind of things, is that I think the adoption of Bitcoin, of cryptocurrencies, and the inflows of money into that mean that even as this liquidity comes out of the market, then it's still going to be supported. So we're never again going to see like a 10,000 Bitcoin, $10,000 price on Bitcoin, because of the growth of the investment flows and the adoption of that. So
Now we heard
sure,
it. Now
as
we're gonna
interest,
hold you to that. We're gonna put that in there. We're gonna see if it ever goes below
yeah, we
10K.
will never again
You've
see.
you've just jinxed it.
Sure, I probably have. I think, as we're saying, as interest rates go up,
Yeah.
if they go up, there's a lot of talk about how can the Fed and the government allow interest rates to go up with so much debt on
Yeah.
balance sheets and that kind of thing. But if they do go up, if liquidity does come down, then we could very well see a very rough 2022, 2023 for stocks and Bitcoin and cryptocurrencies, down to down to 20,000, down to 30,000 or 35,000. But again, I think the adoption, the wide scale adoption of it and the inflows will support it to those lows.
Okay. Well, I guess time will tell. How many
Time will tell.
individual stocks do you own?
I own too many. I really do, and a part of that is just my job as an analyst and on YouTube of just analyzing different stocks and all that. And I like to. I mean, I don't invest in every single stock I talk about on the channel, but I do like to put some skin in the game. I do like to have a stake in a lot of these stocks that I talk about. So I own way too many. I own probably, I think its last count is something like 47, 52 stocks
Well, that's not
across my
horrible. I
different
can imagine
portfolios.
much worch.
Oh yeah. I mean, I've talked to people
Yeah,
with hundreds,
sure.
but I don't. But of course, I don't think you need that much, that many, because to a point, after, what do they say, 20 or 30 stocks, you're just basically getting the
Yeah,
market
you're getting
return.
beta.
Unless all 20 or 30 of those are in one
Yeah.
theme.
Yeah.
If they're all in growth stocks, then you're obviously not getting that market
What
return.
tools do
But
you
yeah,
use? Software, apps to sort of track all that.
sure. Okay. Well, for tracking, yeah, it's a lot of it comes down to just the
Okay.
platforms that I use. So I've got, geez, last count is probably about 7 different platforms that I'm on. And again, part of that is just a function of talking about so many different platforms, on the YouTube channel, getting those freebies, right? Free stock and free cash back is always a good instant return. So I'll use, I've got E-Trade, which I've had that since it was Brown and Company back in 1999. That was my first platform. So I've got that. I've got Webull. Mumu is a new one I'm trying. And for a lot of these, I'll use them, for either, the freebies, kind of trading. So like, for example, on Webull, I like the paper portfolio option, so I can kind of test out ideas and do some more trading research, that shorter term research, that kind of thing. E-Trade is a much more of a longer term research kind of thing, because they offer, I think it's Morgan Stanley research reports, some other research reports available on there. So it's really different uses for different platforms. What I like to do, and then there's good old fashioned Excel, to see it all in one place.
So we've talked about crypto, your individual stocks. I mean, do you just have boring, low-cost index funds anywhere in your portfolio?
I do. I do. And my favorite strategy is really that core satellite strategy where, the majority of your money, 50, 60, even 70% of your portfolio is just in, those broad-based ETFs, whether they're index funds or maybe a little bit more theme-oriented funds, really just to get that broader idea of return, right? Like I said, I'm a big macro type of investor. So I like to invest in the themes and, in the market itself. So I'll have at any one time 50 to 60% of my money in, just a handful of ETFs, whether they're dividend ETFs, bond, very little in a bond ETF right now, but maybe some real estate ETFs, things like that, to get those asset classes and to get that broader market return. And then, I play around with the other 30 or 40% in individual stocks and individual investments.
Do you, one thing that I've struggled with is to keep a very detailed record of all transactions so that I know year to year, this is my performance. Do you do that? Or is it, I guess with all the different platforms, it may be near impossible for you.
It's tough. That's where
Yeah.
Excel comes in, right? That's where Excel comes in to just be able to download all of your transactions, keep them in one centralized place to be able to track everything. Because it is so important to be able to track that, because I think a lot of people, especially if you do have multiple accounts on different platforms, then it can be easy to lose track of what you're actually making. And, trading in and out of stocks, it can be easy to think, oh, well, I'm making money. I'm a good trader. And then, if you pull it back and look at the larger picture, then you're actually losing money. So I think it's very important that you take the extra time to really download your transactions and follow them in one centralized place, just to make sure that you're actually doing as well as you thought you were.
So what do you got planned? What's up? What do you got planned for 2022?
Well, just really doubling down, being able to reach out with the community on YouTube there, actually trying an expanded schedule there in January, kind of going to 5 videos a week. So I'll be doing a market open video every Monday before the market opens, kind of a week in review and a what to watch video, and then the 4 videos each day of the week. A little bit larger expanded schedule from what I'm doing now, which is 3 videos a week. Just being able to see if I can get more information out there and really connect with people on a little bit closer level.
And do you have a team that helps you with all this, or is it just you doing all this work?
Sure. Well, I do have I have an editor that edits my videos. That's usually one of the first things that YouTubers do is they'll outsource the editing, because it's something that does take some technical experience and some background. I have a social media person that helps me with some of the pinning and some of the social media posts. I do also have a Facebook group, a private Facebook group with the channel that is about 13,000 people in that. So she helps me posting and managing that. I also have a blog manager that kind of takes a lot of the scripts for the videos and formats those into blog posts and uploads those.
That's great. Have you found the Facebook group to be valuable for your community?
Sure. Value, so subjective. You really have to find the value how you can, I guess. It does grow that real core community that you have. You'll have a group of maybe 10 or 20 or 50 people that really contribute and really engage. And that's really how you help them. That's really how you nurture that kind of community. Because it's very hard to do that on YouTube through the comments, right? To reach that, to have that back and forth. Whereas Facebook groups is perfect for it. So it's not necessarily a huge value in terms of being able to grow the YouTube channel or send people, send views back to the YouTube videos. But it is nice in that community building aspect.
Yeah, I'll tell you, in terms of comments on YouTube, the spam has gotten so horrible. And the thing that bothers me the most is when someone tries to pretend that they're me and put a WhatsApp number in. And it's gotten so bad. At first I was naive. I reported it to YouTube as if I thought something might actually happen, right?
Sure.
So I don't even report them anymore. It's just a waste of time. But I don't allow comments now. I have to approve all comments, which of course then just sucks up my time. So how do you handle that?
Yeah. I spend about I'd say about 20 minutes, 30 minutes a day, just going through the comments. And it's too bad because, the hide user, just hiding those comments, it does take away from the time that you could actually be responding to
Yeah.
legitimate comments. Uh, but yeah, I do spend a little bit of time each day, trying to hide user and that kind of thing. And of course it's really kind of a fool's errand because it's so easy to start another account and just leave the same
Right.
comment
Right.
from a different account. But yeah, it is frustrating. And I mean, YouTube is working on it. They have gotten a little bit better. You'll notice on a lot of those, the notifications I'll click through and it'll say, this comment is no longer available because YouTube has gotten better at blocking some of those, the very worst spam. But it's tough, and it's tough seeing people comment, that they got scammed by somebody they thought was me, or on the Facebook group where they'll say, "Is this you?" And you look at it and it's like, no, obviously it's not me. I'm not going to ask for I'm not going to ask you to contact me through WhatsApp and try to sell you Bitcoin or
Right.
something. But
Yeah.
it happens, and it is too
Wow.
bad.
Well, listen, Joseph, thank you so much for your time today. And it's been fun kind of getting a glimpse into how you think about investing and how you invest. Obviously, folks can check out your YouTube channel. They can check out your books on Amazon. Any other ways they should follow your work into 2022?
Really, I've got the books, I've got the blogs, but really, I love to see people over on the YouTube channel. It's Let's Talk Money on YouTube. Love to see people join the community and engage there as well as in the Facebook group. And if you go to the YouTube channel, you'll find a link to the Facebook group there. So yeah, just love to see people over at Let's Talk Money
Well,
over on
great. Well,
YouTube.
we'll see if we can help you get up to 1 million subscribers in 2022. Thanks again for being on the show.
That sounds great. Thanks, Rob. I appreciate it.